and welcome again to my channel. So today we shall talk about Warren Buffett's negative take on Bitcoin. Is it really justified? Before we go on to tackling that, let us have a little bit of a background about Bitcoin and its performance. Now, Bitcoin, as everybody knows, has traveled the Earth. It has circumnavigated the Earth. It went to the moon, came back, went to Mars, came back to Earth, and I don't know, who knows where it will go in the next few months. What I'm trying to say is it has gone from 0 to parabolic spikes of 10,000 and then to 15 and then to 20, and now it is on its 50,000 something per Bitcoin, and its performance is it's just incredible. It's almost unreal. Now, what I'm trying to get at is that it's very volatile. This investment is a very volatile investment, and with Warren Buffett's take on it, let us understand and evaluate, is Warren Buffett's take on Bitcoin justified? And here is one of the interviews of Warren Buffett regarding Bitcoin.
At one point this weekend, you said that Bitcoin, and this was basically, you were asked, Charlie said Bitcoin's like rat poison. You were asked about that comment, and you said, well, it's probably more like rat poison squared. Charlie went on in the meeting to then basically call Bitcoin turds.
He is an expressive sort, isn't he? Maybe when he gets a little older, he'll mature.
I just want to ask you about that because it sparked so much controversy, and particularly on Twitter and some of the places where you might expect people who are trading in cryptocurrency to be pretty loud about what they heard. What is it about Bitcoin that gets you guys so fired up?
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. One of the interesting things, for example, is gold. If you go back to the time of Christ and you look at how many hours of labor you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe 1/10 or 2/10 of 1%. And then you have to insure it during that time and make sure somebody doesn't steal it from you and everything. But it doesn't produce anything. And productive assets, you can pay too much for a productive asset. But I bought a farm in the 1980s, and every year look at how much it produced the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business. But if you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in a house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else. And they come to an end. I mean, those.
That's a greater fool theory. That's what you're saying.
Well, yeah, it's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow, and it's wonderful because it does create a rising price. Does create more buyers, and people think I've got to get in on this, and it's better if they don't understand it. That's the other thing about non-productive. If you don't understand it, you get much more excited than if you understand it. I mean, if you buy a bond that says it's going to pay you 4% a year, you're not going to get any pleasant surprises. She's going to pay you 4% a year. But if you can have anything you want to imagine if you just look at something and say that's magic. You can do it with shark's teeth or seashells or anything. And they did it with tulips in the 17th century in Amsterdam, and they'll do it again. I mean, people.
Now, Warren Buffett is the founder of one of the world's most successful investment organization called the Berkshire Hathaway. And if you had been following Warren Buffett, you will understand that his one of the pillars of Warren Buffett's investment is to truly understand the intrinsic value of a certain investment. In this case, for example, a certain organization. Before he invests into a certain organization, he understands what the organization is, what products does it produce, how does it sell its products, and how is it being ran. What are the earnings, what are the gross, what is the net, and how does it profit. Understanding the people who manage the organization is an integral part of his decision-making process. And this is rightfully so, because anybody would agree when we say, well, you want to understand where you put your money. And this is very natural. Now, it is a very different situation when it comes to Bitcoin. See, Bitcoin is not a commodity. It's not a product that you can touch. It's not tangible. It's something that is being talked about, but it's not necessarily there that you can. It's not a sort of mineral that you can actually see and sell it off. It's also not a currency that is backed by any government. So not even the land of Timbuktu backs up the cryptocurrency Bitcoin. So the question now is, where do you invest really when you buy Bitcoin? And the simple answer is, really the very simple answer is faith. Bitcoin runs on the faith of people who believe on the existence of Bitcoin, people who believe that Bitcoin is an asset, and people who believe that if they buy Bitcoin, somewhere in the future when they sell it, somebody who is willing to pay for more than what you bought it for will be there. And that is what Bitcoin is. Now, yes, Bitcoin does not have any intrinsic value. It does not have any intrinsic value in the sense that it doesn't necessarily have any product. It doesn't necessarily have any sort of management. The Bitcoin is being the inventory of Bitcoin is done by simultaneous and collated number of computers around the world. And no one single person or single organization has a private access to that inventory. It's available to everybody. Bitcoin does not necessarily have any intrinsic value. But if you have been following the news, Elon Musk, the founder of Tesla, has invested $1.2 billion worth of Bitcoin. Now, that is a lot of money. It's such an amount of money that I don't think I can even count it in my lifetime. I know for a fact that I will need a machine to count it. But if that amount of investment does not provide value to this Bitcoin product, then I don't know what is. The fact that one man spent or invested 1.2 billion worth of Bitcoin, then that in itself already provides value to this investment, right? Now, but then you will also have to think, then that man has got a monopoly on the fate of this cryptocurrency. If this guy, if Elon Musk decides somewhere in the next few weeks or few months that, hey, I need money the company Tesla needs money to invest on some car or on SpaceX or its exploration of Uranus, who knows, then he decides to take his money from Bitcoin, and then the entire fund collapses. And the danger of it is there is one man who has an overarching command on the faith of one investment, and that's a very risky path to take. Now, what I'm trying to get at is, do not invest on an asset or a product or a commodity just because it is on hype, just because people are talking about it, just because you want to follow the mass. Don't do that, please, because you will be throwing your hard-earned money down the drain. So what is the essence of this video? The essence of this video is not to tell you to invest or not to invest on Bitcoin. This is not where I'm trying to get at. What I'm trying to say is that before you invest your money in any kind of investment, may it be property, may it be cash perhaps, or maybe in business, maybe in cryptocurrency, first understand where you are getting into. Understand, where are you putting your money into? Is this something that you can sell in the future? Is this something that you should or you can expect capital gains at? Or is it something that you can expect dividends at? How is it being managed? And how long is your plan on taking or holding on to this investment? Understand where you put your money into and understand what exactly is the asset that you are buying. Do not follow the hype. Just because people are buying Bitcoin right now, that you should buy it as well. No, because if you will have such kind of path in your investment strategy, then I'm afraid to say all your hard-earned money will go down the drain. So understand your investments, understand the organization, and have a deep understanding on how long do you intend to hold this investment for. Thank you very much, and I hope you like it. If you did, please like and share and subscribe as well, and I shall see you in the next video.